This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live, as always, from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Nigel, and Surabhi is joining us today. Surabhi, hi. Nigel, hi.
Good morning, Prashant. Good morning, Nigel. And Prashant, wonderful to look at you. You are the burst of color between, all the three of us.
Although I do worry just a little bit whether this is closer to red. I mean,
I think
that was not my intention.
Perfect pink, and I think it's getting us closer towards the weekend. I think it's the color for
Possibly
Thursday.
you could be getting it right today if it's towards red. Let's see how it goes.
Yeah.
Maybe it's the pink of health. Let's be positive.
Positive, right? I mean, always positive. Now, overnight things are looking okay. I mean, they're not looking too bad. But the two big triggers are behind us, right? I mean, at least for now, there is continuity with both. Let me just quickly explain. So you have the Karnataka state elections where the exit polls show that the Congress party has a slight edge. Most exit polls show that. Actually, two specific exit polls give Congress a clear majority. Now, the point is that the counting of votes and the election results is on Saturday. And that's why I'm saying that, well, this is exit poll. The actual results are on the 13th, which is Saturday. The only way this kind of becomes very different as compared to for the market is if the results vary widely and in a very big way from what the exit poll results show, which is if, of course, I mean, the incumbent party, which is the BJP, gets it, goes all the way, which is not likely according to exit polls, or on the other hand, the Congress, which is projected to have a slight edge in the elections, actually goes all the way. And it turns out to be a much bigger one. In either cases, I mean, I think the surprise element will be very much there when we come back on Monday morning. In different ways. I mean, in the former, the market, I think, will get very exuberant on Monday morning. And if it's the latter, I mean, we'll see. I mean, talk about what this means for 2024 elections, etc. will start, what the government will have to do, etc., etc. Already, I'm seeing some brokerages saying that if the exit poll results are true, it means more populism and it means perhaps actually good news for the rural part of the economy. So we'll talk about all of that. But this is the first one. The second is, of course, inflation numbers overnight, which softened, but they softened in line with expectations. I'm talking about the core CPI out of the US. Markets, by the way, they immediately removed all hike expectations from the June FOMC. So that's that was done very quickly. Market reaction also sort of to be noted. The 2-year lost about 10-11 basis points. The 10-year lost about 8 basis points or so. So markets repriced quickly, as they always do. The question, though, I think which many are asking, and we'll sort of put this out later, is whether the market are kind of starting to overestimate this once again. It's happened for the last 1 year consistently. The markets start to price out rate hikes, price in rate cuts, only to pull back later. Many do believe that the CPI numbers out of the US are not dovish. I mean, they have softened, but it was expected. It's not as if the underlying inflation momentum is coming off sharply as the Fed would like it. All right, let's come to the market here in India now. So yesterday was interesting because we got a dip, but it was completely bought. The market ending about 0.25% higher. 18,315 is where the Nifty ended at. The levels are largely similar. On the upside, the Nifty needs to take out 18,450 and 18,720. These are the two levels to watch as we go above and if the market does see an impulse higher. On the way down, the 18,202 number and then the low of last Friday, which is 18,055, are levels which should not be violated ideally in case there is some selling pressure which starts to emerge. The Bank Nifty is, by the way, yesterday it's holding above the 20-day moving average. That becomes the first sort of support on the way down. That number is 42,666. And below that, you've got 42,582. These are very near-term levels as compared to where the spot prices are. On the way up, the two levels to watch on the Bank Nifty are 43,740 and 44,385. So, these are sort of levels to watch out for as we start another trading session. SGX is indicating a 31 odd point higher start. The fact is that the impulse has been to try and buy the dip. We've got this Saturday verdict, the final election results, which will come through, actually the only election results which are to be expected. And as I explained, if the outcome is a little extreme as compared to what the exit polls show, I think Monday will be something to watch out for. We'll get another reaction, however short-lived that is. With that, Surabhi, what are you picking up? Earnings are not looking all that great as well.
Earnings are a mixed bag. Yeah, on inflation, I just want to add one more point, to this, Prashant. That absolutely, as you're saying that for what it's worth, the market was happy with the headline number that came out in the US. It's also the lowest pace of the rise in inflation in the last 2 years. Year-on-year rise of 4.9% is the lowest that we've seen in the last 2 odd years. The market took that with both hands, though, there are those who will argue that core inflation is sticky and whether this number is really as good as the market wants to believe it is. Anyway, we've got a cautiously optimistic sort of a global setup because of that. Speaking of inflation, the inflation print in China, by the way, is also very, very benign. It's actually a surprise fall. The rise in April CPI in China is just 0.1% versus estimates of an increase of 0.4%. So across the board, inflation doesn't seem to be a worry. In fact, crude also sold off a little bit. It's back about 1% this morning, but it sold off a little bit in overnight action. So that's on the global side. But coming to earnings, as Prashant mentioned, it's more of a mixed picture. The big one was L&T. And did you get a rousing sort of thumbs up, table thumping number? The answer is no, because while the order intake continues to be very healthy, it disappointed on the EBITDA front, on the margins. The bottom line as well was shy of expectations. Dr. Reddy's, optically, you'll say the numbers are meeting most estimates. But look at, the fine print. The US business for Dr. Reddy's hasn't done that well. It's been slowing quarter on quarter. So we'll see what the analysts are saying about it. Godrej was, of course, the better of, the all three, if I look at them, because it was a clean beat on most fronts. In fact, the margin was good. The volume growth was 11%. So Godrej probably goes down as a good number. Today, we've got a couple of important ones as well. Asian Paints, for instance, Eicher Motors, Siemens will come through. So we need to see from companies like L&T, from Siemens, that all this huge ordering, is it resulting in good execution at the end of the day, good margins and profits? Dr. Lal Path Labs and Intellect Design from the mid-cap space. A couple of interesting earnings. Just want to round it off with the very strong flow momentum that we have from foreign investors. First, let's put up the provisional numbers, the daily numbers that we've been getting. And mostly it's been a 4-digit number that we've gotten used to looking at. In fact, yesterday's figure was around 1,800 crores of a positive buy, the FPI number. The day before it was about 1,900 crores. Day before it was 2,000. So FPI flows have been very, very solid. That's the provisional figure, the daily figure that we get in from the NSE. Look at the actual numbers that we get from the depositories, and just the monthly tally will come up for you. Very steady rise in terms of participation from foreign funds and foreign investors. The May picture so far, and we're only we're on the 11th of May today, and look at that, almost touching 20,000 crores of inflows coming into the market. Nigel, I guess all this put together, if you just go back to the screen yesterday, right, it was a very sort of muddling along kind of a day, but towards the end, we did manage a close of 18,300. So maybe, the market saying that we really want to stay in control over here.
Well, that's right. Surabhi, so you have that yesterday's positive tick that you saw, and you have this morning's SGX Nifty that's suggesting a bit of a positive tick as well. You put both of them together, and going by what the SGX Nifty is suggesting, I think on the index, taking some money off the table would not hurt. You have the election results over the weekend. You have a couple of big data points. Biden's going to be meeting the congressional team as well to see whether or not that debt ceiling can be raised. So, given the kind of cues we had, you've had a good run. You get a 50 point uptake, take some money off the table. And remember, today's expiry as well. So I think taking some money off the table will not hurt anyone. The institutional data as well, as you mentioned, is rock solid. That's looking very, very good, both in the cash as well as in the F&O market. But from the mid and the small cap index, well, yesterday there were some signs of fatigue. Remember, the last 40 days have belonged to the broader markets. No questions out there. But in yesterday, the sense you got is, the mid and the small cap indices itself, they underperformed both the Nifty and the Nifty Bank. Even the auto index was much higher. So some kind of consolidation is what we are seeing. Though individual stocks will continue to do very, very well. Mind you, I'm talking about on the index level itself. The institutional data, well, the FIs, they bought for 10 straight sessions, so no worries out there. But in terms of institutional flows, as the FI and the DI number, I look at it together. And the net institutional flow yesterday was around 1,000 crores. The 10-day average is around 1,500 crores. So in that sense, it's a little bit lower than what we've seen in the past. We'll have to monitor this trend moving ahead. It was a clear case of short covering yesterday. Both on the Nifty and the Nifty Bank, we did see some open interest unwinding. What did the FIs do? Well, they added some long positioning, though they continue to remain mildly net short. The net short positions are at around 51% odd. On the option side, given that today's expiry, well, important to track. So they bought puts, but they wrote puts as well. So we're not expecting a deep cash, but maybe some sort of consolidation or maybe some mild pullback is what we could see on the index. 18,300, 18,200 put. Between them, they added close to 55 lakh shares on. So there was writing being seen out there. Plugging in the numbers going by the options data, 18,200, 18,250, that's the support zone. But on the upside, that resistance zone comes in at around 18,380 to around 18,420. And I'm going by the call writing that we have seen, and that's how I'm coming to that number. Now, for starters, we'll open closer to around that 18,360 odd. That's why I say taking some money off the table will not hurt. SGX Nifty suggesting a gap up. Let's see how this one goes.
Okay, we're all set for what looks like will be a very interesting session. So let's kick it off with the equity call of the morning. Mahesh Nadurkar of Jefferies says that Karnataka exit polls highlight the election outcome would be close and Congress might turn the tables on the ruling BJP. While this is an incremental negative for the BJP, their analysis shows that voters vote differently in state versus national elections. The consensus base case still remains that of political continuity in May 2024 in the national elections, that is. Jeffrey expects the government to turn more populist, which should be good news for rural consumption, and therefore Jeffries is overweight on staples.
Okay, let's get you some money market views as well. This is on the rupee. Parul Mithil Sinha of Standard Chartered weighs in. She says the USD INR traded in a narrow range as the impact of dollar weakness and lower oil prices was offset by USD buying by PSU banks along with market positioning. For next week, the dollar INR pair will trade in a range of between 81.65 to 82.3 to a dollar. Apart from the dollar and oil, Parul says reserve building efforts by the RBI will likely be the key forex market driver.
On bonds, Parul says that domestic bonds traded range last week amidst volatility in global rates, lower oil prices and tight liquidity conditions. Parul expects the Indian 10-year benchmark yield to trade in a range of 7 to 7.10, with a relief rally seen in global bonds after the US CPI data. Also, the 1 trillion redemption, which is due next week, is supportive of bonds going forward. They will closely watch for India CPI data, RBI liquidity steps, if any, and the dividend announcement from the central bank.
All right, well, that's entire setup, but we have got a lot of stock-specific action to track for you, and we'll get to that in just a wee bit in our top 10 segment. We're looking at Hindalco, Godrej Consumer Products, Gujarat Gas, SRF, Bosch, Ratnamani Metals, as well as Precall and Adani Enterprises. They are stocks that will be reacting to positive news flow, while a couple of those big names from the headline index, L&T and DRL, they could be reacting to the negative results that we saw overnight.